Have you ever wondered what really goes on behind the scenes after a global giant like PPG announces its quarterly earnings?
Yeah, I mean, they're known for protecting and beautifying the world with paints and coatings.
Exactly. And you wonder, how does a company that big navigate, well, everything happening in the global economy?
It's complex, for sure.
So today, we're taking a deep dive into PPG's second quarter 2025 results. We've got their earnings call info, the detailed reports from July 29th and 30th.
And our mission really is to unpack it all, go beyond the headlines.
Yeah, find the key numbers, the trends, maybe some surprises, and get that full picture of how they're doing.
Right.
Now, okay, first glance. Net sales for Q2 2025 down slightly, 1% to $4.2 billion. Mostly divestitures, selling off bits.
And this is the interesting part.
This is it, yeah, their organic sales, up a solid 2%.
So the core business is growing.
Right. And adjusted earnings per share came in at $2.22. So let's dig into that. What's really driving these numbers?
Okay, where should we start?
Let's kick things off with what seems like the real shining star. Performance coatings, record quarterly sales and earnings.
Yeah, that segment was definitely strong. What's fascinating is how they got that 6% organic sales growth.
Okay.
It wasn't just price hikes. It was an equal split, higher selling prices, and more sales volume.
Ah, so real underlying growth.
Exactly. It shows their tech advantage and, frankly, good commercial execution. All four businesses in that segment actually outgrew their markets in Q2.
All four. That's impressive.
It is. And it led to a very healthy 25.7% in EBITDA margin, even with them putting more money into growth investments.
Okay, let's drill down there. Aerospace coatings, high single-digit organic growth. What's the secret sauce there? It seems so consistent.
Well, demand is just incredibly strong. Simple as that, almost. Their customer order backlogs, holding steady around $300 million.
Okay.
And PPG is clearly backing this horse. They're putting money in OpEx for day-to-day, CapEx for the long term.
Like that new factory.
Exactly. That new $380 million factory in the U.S., they say it's to capitalize on their unique technology position.
So they feel they have something special there.
They do, and they expect this growth, high single-digit, maybe low double-digit, to continue, definitely through 2026.
Wow, okay. Another standout you mentioned was protective and marine coatings, PMC. Double-digit growth.
Yeah, and get this, it's their 9th consecutive quarter of positive year-over-year volume growth.
9 quarters straight. How are they managing that consistency?
It seems to be a mix. Global demand for their tech is up, plus, importantly, they're gaining share, winning business.
From competitors.
Right. Specific things are working well. New tech, like Sigma Glide, Sail Advance. That one's copper-free for marine dry docks, which is a big deal. Fire protection products, too.
Where is that growth strongest?
Seeing real momentum in EMA, that's Europe, Middle East, Africa, and Asia-Pacific. And they're continuing to invest more there. It's clearly working.
Okay. Then there's traffic solutions.
Yeah.
Mid-single-digit growth, also beating the industry.
Yep. Strong demand, share gains again, especially U.S. and Canada. It lines up nicely with all the infrastructure spending, you know?
Yeah.
More roads, more markings.
Makes sense. Now, here's a twist. Automotive refinish. Organic sales down low single digits, but they outperformed the industry. How does that work?
It's a good question, right? It shows some resilience. The overall industry, think collision claims, was down high single digits.
So fewer accidents being repaired.
Basically. But PPG did better because, again, share gains helped and also some customer order patterns benefited them. Plus, they're really pushing digital tools.
Ah, the tech angle again.
Yeah. Growing subscriptions for their PPG-linked platform helps shops manage things, and they just installed their 3,000th Moonwalk system in July.
Moonwalk. That's the automated paint mixer.
That's the one. It boosts productivity for their customers, builds loyalty, even when the market's tough.
So what's the outlook then for refinish, this marquee business as they call it?
Well, they expect slightly softer volumes in Q3, kind of a normalization of those order patterns. Q4, more normal again.
But the overall industry recovery.
Not really expected until 2026 for claim rates to bounce back fully. So that digital side, the subscriptions, that helps cushion things for PPG.
Right, builds a buffer.
Definitely. So overall, that impressive 25.7% EBITDA margin for the whole performance segment, it really comes down to that tech advantage, the digital subs, even while they're investing more. And like I said, all four businesses beat their markets. Quite something.
It really is a powerful story for performance coatings. Okay, let's pivot now. Global architectural coatings and industrial coatings. face some headwinds here, but also signs of progress.
Yeah, a bit more of a mixed picture. Architectural first net sales down 5%, organic sales down low single digits.
What drove that?
Partly divestitures, like we mentioned, lower sales volumes too, though pricing helped a bit. Europe, or EMEA demand, was described as tepid,
Tepid, Jeff.
especially Eastern Europe, though the Nordics and UK had some positive momentum.
What about elsewhere?
Latin America, Asia Pacific. Mexico has solid retail sales, which is good, but the bigger project spending was down compared to last year, though it was better than Q1.
Sequentially improving, okay.
Right. And they had a sort of temporary internal supply chain issue in Australia in Q2 as well.
So how did all that hit their margins in architectural?
Margins definitely felt it. Lower volumes, the divestiture effect, currency swings weren't helpful, and that drop in the high-margin B2B project work in Mexico.
So what's the outlook there?
They expect Mexico project spending to keep improving through the year, but Europe, consumer sentiment likely stays soft. So, yeah, a mixed bag. Requires agility.
Got it. Okay, shifting to industrial coatings. Net sales also down, but interestingly, sales volumes were flat. That's better than recent quarters, right?
Exactly. That's a key point. It reflects what they call the initial benefits of share gains. They've been working hard on winning business here.
So the strategy is starting to pay off in volume terms.
Seems like it. Now, selling prices did dip slightly because of these index-based contracts they have with some customers.
Tied to raw materials, maybe?
Often, yes. And the silicas divestiture also hit the segment's EBITDA margin. But that volume stability, that's the headline for industrial.
Okay. Within industrial, let's look at automotive OEMs selling to car manufacturers. Volumes down in the U.S. and Europe.
Yeah, that tracks with overall car production slowing down in those regions, but grew in Asia and Latin America. And they specifically mention share gains in Brazil.
So even in a tough market, they're winning some contracts. How significant are those share gains for the outlook?
Pretty significant, it seems. They expect to grow above industry levels in Q3, specifically because they're converting wins they've already secured.
They put a number on that.
They did. They sized the annual share gains in the industrial segment overall at about $100 million.
Wow. Okay. So that's their plan. Outperform a flat market by taking share.
That seems to be the core strategy, not just waiting for the tide to lift all boats.
What about packaging coatings? That sounded like a bright spot.
Oh, definitely. High single-digit organic sales increase. Way above the industry.
What's the secret weapon there?
Two things, really. One, continued share gains again. Two, they're benefiting as customers switch to PPG tech because of expanding BPA regulations in Europe.
The regulatory push. BPA is that chemical in plastics.
Exactly. Bisphenol A. Growing health concerns, more regulation. PPG has alternatives, so customers are moving over. It gives them a real edge.
And demand for packaging is holding up.
Yeah, global demand for beverage, food, personal care packaging is solid, and PPG is just running ahead of the market there. Now, the broader industrial coatings unit, volumes were flat overall. Share gains were offset by weaker demand in Asia Pacific and the U.S., some softness in things like extrusion, consumer electronics, partly due to tariff uncertainty.
So even with those share gains driving their confidence for the second half.
Right, their confidence is, as they put it, entirely share gain driven. They're not seeing inventory stacking or expecting a big macro lift. They're relying on their own execution.
That's clear. Okay, we've covered the segments. Let's zoom out a bit. PPG's overall financial health, strategic moves, what's the picture?
Well, the balance sheet looks strong. They had $1.6 billion in cash and short-term investments at the end of June. That gives them flexibility.
Flexibility for what?
Shareholder value creation, mainly. They paid back $300 million of debt in Q2, got another $600 million maturing in Q4. They did raise some new debt earlier in the year, $900 million notes.
But they're managing the debt load okay.
Seems so. They're well within their covenants, the rules set by lenders. Their debt to total capital ratio is 48%. Limit is 60%. Plenty of headroom.
And returning cash to shareholders.
Oh, yeah. Bought back about $150 million of stock in Q2. That's $540 million year to date. They said they don't want cash just building up.
Right.
And they bumped up the quarterly dividend by 4% in July, too. Another sign of confidence and focus on returns.
Okay, lots of financial activity. What about costs, specifically raw materials? Is inflation still a big headache?
They're expecting low single-digit inflation for the full year. They noted suppliers seem more interested in volume than pushing prices right now.
So maybe some easing there.
Some. They do see impacts like currency effects on materials bought in dollars from Mexico, but they say they've been able to price through that inflation in Latin America. Epoxy prices did go up, linked to tariffs earlier in the year.
And besides pricing, how are they managing costs?
They highlighted their aggressive self-help and discretionary cost management. Getting results, too. $20 million in restructuring savings in Q2, aiming for $75 million for the full year.
So actively cutting costs, not just hoping things get cheaper.
Exactly. Proactive management.
And on the proactive front, what about M&A? Mergers and acquisitions. Are they hunting for big deals?
Mostly no. They said they're looking at very small things, bolt-on acquisitions that fit neatly.
Add-ons, okay.
There's apparently one super hot, larger opportunity out of Germany, but they're only interested in a piece of it and it doesn't fit the seller's plan, so probably nothing major short term. Seems like a cautious, disciplined approach right now.
Makes sense given the environment. Speaking of the environment, what about tariffs? Trade tensions are always simmering. How's PPG handling that?
They said they're actively monitoring, ready to react. That means pricing actions if needed, or more of that self-help, cost-cutting stuff.
Have tariffs actually hurt them much so far this year?
Apparently not significantly in terms of customer demand or raw material costs in the first half. And they see Mexico's location, its proximity to the U.S., as a significantly advantaged position, even if tariffs do get imposed. Sort of a natural hedge.
Interesting point. Okay, so we've gotten deep into Q2, the strategies, the financials. Let's pull it all together. What does this mean for the rest of 2025 and beyond? What's the big picture?
Well, PPG sounds genuinely excited, actually. They're anticipating accelerating positive volume growth in the second half.
Accelerating.
Yeah, driving what they expect to be a high single-digit percentage year-over-year earnings growth for the whole company.
And that picks up steam.
Expected to, yeah. Mid-single-digit EPS growth in Q3, then accelerating to low double-digit growth in Q4.
So they're sticking to their full-year guidance.
They are. Reiterated the range of $7.75 to $8.05 adjusted EPS. And they explicitly said they have a clear path to achieve it.
What's driving that confidence, fundamentally?
They keep coming back to what they call their algorithm for growth. It's about having a sharpened portfolio, focusing on those technology-differentiated products and services.
The stuff that gets them better margins and share gains.
Exactly. Designed to deliver growth above the industry. Combine that with disciplined capital allocation, the strong balance sheet. It's aimed at sustained growth, top and bottom line.
And innovation plays a role.
Big role. They talk about chemistry inside the can, obviously, but also digital productivities outside the pan, like the moonwalk system and using AI more. It's a holistic approach.
Okay, that covers the business outlook.
Yeah.
But there's one more area mentioned in the reports, the legal landscape. Always important to understand potential risks. What stood out there?
Right. So they maintain reserves for ongoing things. Asbestos claims, about $43 million set aside. Environmental issues, $228 million reserved.
Do they think that's enough?
They state they believe these won't materially affect their financial position or liquidity. But costs could hit quarterly results, sure. And they acknowledge there could be unreserved environmental losses, maybe $100 million to $200 million. It flags the long-term nature of some of these liabilities.
Okay, ongoing management. Was there anything else particularly noteworthy?
Yes, actually, there's this ongoing De Gregorio litigation in Brazil. It's fascinating in a complex legal way.
What's the story?
It goes back to a cargo ship fire in November 1998. Recently, there was an award against PPG. They're the nominal defendant for over $700 million. Or maybe $350 million using simple interest. The numbers are large either way.
Against PPG. But they weren't necessarily responsible.
Well, here's the twist. PPG says another company, Westlake, actually assumed liability for this specific matter years ago. So PPG is now in litigation with Westlake to enforce its indemnity rights, basically, to make Westlake cover the cost.
Ah, so it's a fight over who is ultimately responsible.
Exactly. And PPG believes its risk of loss associated with this matter is remote because of that indemnity agreement. There's a trial court decision expected in Q3 this year.
So that's one to watch. It really raises questions about how corporate liabilities get transferred and, well, if those agreements always hold up when challenged.
Precisely. It's a complex legal web.
Absolutely. Well, as we've explored PPG's Q2 deep dive from those high-flying performance coatings to the strategic moves in other segments, the solid financials, even these intricate legal issues, you really get a sense of how a company like this adapts, right?
Yeah, navigating uncertainty using tech, smart acquisitions, cost control, financial discipline.
It's quite the balancing act.
Yeah.
So here's a final thought to leave you with. Considering PPG's very deliberate focus on technology-differentiated products, that aggressive cost management, and their strategic capital allocation, What unexpected shifts might this kind of comprehensive approach spark in other, maybe more traditional industries that are also fighting for growth in today's dynamic global markets?
That's a good question. Could we see more focus on tech differentiation even in seemingly basic industries? More aggressive portfolio shaping?
Something to think about.